But let's talk about this quarter because, as I said, these are record and historic numbers for you.
Yeah, Andrew, it's great to be here. I remember doing this with you. It was now a year ago, and I was at home, and I was worried about whether the Wi-Fi would work. And it certainly feels a lot better to do this today from the office. Back then, investors were concerned about what was going to happen with the economy, what was going to happen with companies, including our own. And I said back then, we have a business that is really built for an environment like this. We had a lot of confidence we would get through the crisis. And it's great to sit here a year later and talk about an outstanding quarter for us. We had distributable earnings that more than doubled. We had fee-related earnings that were up 60%. Most importantly, we delivered for our customers. So when you look at the numbers, we had the second most appreciation in our funds in our history. It was led by private equity and tactical opportunities, up more than 15% in the quarter. A bunch of our investments in technology-related businesses paid off for us. So we had Bumble and Ancestry.com that did great. We also saw great numbers in logistics, and that led to a lot of inflows for us in the quarter. Our continued strong performance, $32 billion of inflows, much of that coming in perpetual capital that provides a real recurring base for us. So very good numbers.
Hey, John, should investors think about you differently? And the reason I ask that is because the Ancestry and Bumble deals, and maybe some of the other deals that you've started to talk about, look like you're focused much more on growth companies, perhaps, than you have necessarily in the past. But invariably, that's going to come with more risk.
You know, I think the way to think about our company is that we're really thematic in our approach to investing. And so what we're looking for are sectors of the economy, geographies, where we think growth will be higher, where we can deliver better returns. Obviously, that's been in faster growing tech companies, life science businesses, and real estate related to those sectors. But if you looked at our first quarter, you'd see we invested in a lot of traditional industries that we think have great tailwinds. So big themes for us were the COVID reopening. We invested in hotel businesses in Japan and the United States, holiday park business in the UK, a private aviation business in the US. We invested in a bunch of things around the environment and what's happening around ESG and so forth in terms of remediation. So I think the way to think about our company is one that's focused on delivering great returns, and getting there is getting to the right neighborhoods.
Shepard Smith here. Thanks for watching CNBC on YouTube.